When Wells Fargo talks about silver and gold and talks about them in a positive light, we are going to listen. We are going to pay attention, and that's just what they did. Mr. John LaForge, our new friend from Wells Fargo. He's the head of real asset strategy at Wells Fargo. Hey, look, they're a huge financial institution which millions of people follow. He had some fascinating, insightful things to say about the silver market, about the gold market, and we, yes, you and me, we're going to talk about them right now. Amongst other things, John talked about a super cycle. I haven't heard that word in a while. Also, he brought up one point that I'd forgotten about regarding the relationship between silver and gold and how they react during a bull market, which is even more good news. We're going to cover that, but let's dig into a couple things that he said in this article. John said that the silver market is signaling that gold's weakness is temporary. He then went on to say, I'm a little more positive on silver now that we're back to $23. It's the high beta play. Silver is showing signs that whatever weakness we see in gold, it is probably short-lived. When silver starts beating gold, it is closer to a bull market in precious metals versus the other way. And that's the thing that I forgot about. I don't know if you forgot about this, but traditionally in a precious metals bull market, silver will outperform gold. And what have we seen since the summer, right? We had 1750 silver. It's up almost 40% through today, whereas gold is doing much better, but lagging behind, up maybe what, 15, 16%? So we're seeing that right now. Silver is blazing a trail ahead of gold, and that's exactly what happens in a precious metals bull market. It is a good sign. It doesn't mean we know, right? We're not naive now, are we? It doesn't mean that for sure things are going to keep going up and up. But based on past experience, when silver outperforms gold, that's a good sign for the precious metal sector in general. And our friend John had a lot more to say. We're going to cover it right now. He said, you can sense gold wants to go higher next year. Yes, John, yes. Gold had a rough 2.5 years. Yeah, we are aware of that also, John. He then said, in the last couple months, with all the talk about the Fed pivoting, gold started to perk up. Yes, we know that, John. We like when gold perks up. Next year, both gold and silver will do well. Silver might do even better, he noted. Wells Fargo sees gold between $1,900 and $2,000 next year. He says this, if we hit that level, that $2,000 level, my bias is to increase those targets. John, you are welcome here in the basement with me, you watching right now, and the bear anytime. We like the way you think. By the way, thank you. Yes, you. You're special. You've decided to join me here in the basement right now. I hope you enjoy being here. You're always welcome. If you get some value, please subscribe, give the video a thumbs up. Now let's get back to talking about our new friend, John. Next, he elaborated further on the outsized potential for our friend silver. He said that over a super cycle, which is 10 plus years, percentage-wise, silver does better than gold. That's what happened during the last cycle between 1999 and 2011. That is typical, he said. Then he talked about a number that's music to our ears, $48 silver. Although he cautioned that is years away in his opinion because we're only into year 3 of the current super cycle. Hey, we think it's going to happen sooner, right? But the fact that we've got one of the big banks talking about new record highs in silver within the next 3 to 5 years, that's great news. This Kitco article wraps up with the three big drivers that I presume John sees as the force behind higher prices in the precious metals. Driver number one, when the Federal Reserve and our old friend Jeremy Powell, when they have to pivot because the U.S. economy is crashing right now. The second big driver, there's a limited supply of the metals and there's less and less coming out of the ground relative to demand on an annual basis that will continue to provide support for the metals. And finally, number three, I got to look down because I forgot number three. The third driver will be gold as a contrarian play. I'll just read this to you. The precious metal has underperformed relative to other commodities during the last 2 years. This is a sign for some investors to start rebalancing their wins and losses and moving more money toward gold while it is still cheap. Here's just a few more quick quotes from our friend John at Wells Fargo. You will get investors coming back to some of these contrarian plays. When you're in a bull supercycle, more assets under management will start moving towards commodities, and it tends to lift the entire group up. And gold hasn't gotten that yet. Typically, at the end of the year, you buy losers and get rid of winners. That's what is going to happen with gold. It's been in the penalty box for 2.5 years. Yeah, we know that, right? We've been in the penalty box with gold and silver, for that matter, for the last 2.5 years. But it does look like we have smoother sailing ahead. We have an environment that is conducive to being very supportive to the precious metals. Now, we all know anything can happen. John could be wrong. Ron could be wrong. You need to do your own due diligence and make up your own mind when it comes to investing in precious metals and the mining stocks for that matter. I'm a believer, but that doesn't mean you have to be. We always want to hear everybody's opinions. Consider the pro argument and consider the con argument. But one thing we do know for sure, you're always welcome here in Ron's Basement. Again, I honor you joining me today. Friend, I'll see you next time.